Hello and welcome. It's Scott Bennett and Mike Olafson. We're going to talk about where is the money moving. Mike, how are you feeling today, buddy?
Pretty good, Scott. Florida was nice last week. Beautiful weather, but it's great to be home. It's always great to get home. How you doing?
I'm doing good. Thanks for asking. I'm excited to go over where's the money moving because I feel like I know some of this is covered potentially, like little bits are out there, but I think you're going to see some charts that most people have not even considered yet. So we're, by the joy of trend following, we're seeing things before the curve, before most people, before they've really made major moves. So let's dive into the update. Before we do, world's quickest disclosure. This is just information, not a direct solicitation to go buy or sell anything. Please always manage your financial plan, your risk, your stops. There's risk out there. We have a market that is under some serious pressure. We'll talk more about that, but you know how all that fun stuff works. So, Mike, I'm going to go for here and I'll chime in and ask for some feedback. But the question is, where is the money moving? And I saw this really interesting tweet from Mike Shell off of X or Twitter. And moral of the story, he said, the Magnificent Seven stocks, they represented back in December about 33% of the S&P 500. And the largest 10 stocks, so you throw three more in there, it actually got to 39. I had to pivot my head on my camera there. 39% of the S&P. 39% of the S&P is 10 companies. Pretty crazy, right, Mike?
Super crazy.
Yeah, that's super concentrated. So you're at this
Yep.
massive peak in concentration of the S&P. So even though you think you're investing in 500 companies, you're really investing in 10. So then what's happened in 2025 on the right-hand side, I'll move my mouse. So far, as of the close of Tuesday night, the IVV or the S&P 500 is down 4.54%, down we'll call it 4.5%. The Magnificent Seven, which in full disclosure, we did own a lot of them. We were thinning out. We eventually owned Meta, we sold for a profit, and we owned Amazon, we sold for a profit. It's down 15.5%. So the money is leaving and has left and is still dribbling out of the MAGS ETF, the Magnificent Seven. So the Magnificent Seven, everything is turning. That's what I want to share. So first is, where's the money moving? It's moving out of the Mag 7. Where is it going? I'm going to show you on the very left is called a relative chart. It's comparing two things. So, or a ratio chart, some people call it. So first is we're comparing gold to the S&P 500. So if the price is going up, that means that gold is outperforming the S&P 500. And what I wanted to simply share on this 3-year comparison ratio chart is you kind of have you hit your head, you hit your head, you hit your head, and the S&P is like just buy the S&P, even though Warren Buffett says he doesn't do it. So you have this massive breakout in gold, and we're there, and we have a position in IAU, and this is the spot where the trend changed. You now have significant strength in gold compared to the S&P 500. Year to date, IAU is up 15.5%, where the S&P is down 4.5%, and the Magnificent Seven's down 15.5%. Talk about alpha and deterioration. So I'm going to stop there on comparison chart one. Mike, any thoughts on what we're sharing?
I think you set it up very nicely. But here's an interesting thing I'll throw out there, Scott, is at the dinner table last week with my in-laws, they brought up gold. And so I kind of wonder about gold. Can it continue to move? It's kind of that old adage where as soon as everybody's talking about X folds. So what's your thought on gold and the trend?
Yeah, it's a good question. I would say the majority of the public does not own gold. Most
Yep.
asset allocations do not own gold. Most individuals do not own gold miners. Most people are watching TV too much during the day, or probably getting sold gold coins or numismatic,
Yeah.
those ones that are impossible to resell.
Yeah.
So the answer is this is a change. This is a change of guard. And I'm willing to bet that do your in-laws own gold or they're just thinking about it?
I see. There's the interesting thing. They don't yet, and they were going to look into it, quote unquote. Yeah.
Okay. And so that's a tell. So it's not like they're
Yeah.
like it's not a, it's a little different than like when everyone owns NVIDIA and then now NVIDIA needs to produce this incredible rate of change revenue growth. And if they
Yeah.
don't, they can still fall, even though it's still this amazing company with amazing chips that everyone needs, but it's not growing as fast as it could be. This is people considering that haven't gotten off the couch and done it yet.
Yeah,
So
yeah, it's kind of like, oh, we just discovered this, and it goes back to the point you made about 5 or 10 minutes ago, that we are seeing in the trend things that people are just discovering now.
yeah, and I think, well, Trump's been talking about auditing Fort Knox, so it is making more headlines, but people don't own it. So that's important. And most big firm allocations don't own it. If you think about gold mining stocks, it is the smallest amount. I think there's one stock in the S&P 500, correct me if I'm I think it's just Newmont. So there's no one. And I don't have a chart of gold miners, but it's the same, similar. But gold
Mhm.
physical looks better than gold miners because gold miners are just breaking out now. And they do have more volatility. I'm going to move to the biggie. So when I worked at Fidelity for so long, even during that time period, which feels a really long time to me, I haven't been there in years. I hold money there as an independent fiduciary advisor, but I don't work there. So every client would say, like, why do we own international? It's underperformed. It's underperformed for the 5 year, the 10 year, the 15 year. It There has been this money comes to the United States from domestic and or overseas, and what do? They buy the Mag 7. And why? Because they're cash cows. So now what's really interesting is after 3 years, the trend is turning, and it turned in February. You can kind of see for all these charts, the trend turned in February. So again, you're seeing outperformance in VEU, all world minus US, and you're seeing it year to date. It's up 9%, and the S&P is down 4.5, and the Mag 7 is down 15. So where is the money moving? It's moving here, and that goes for China, Japan, Europe, Latin America. It's moving, and it's a little different. So I just want to be clear that it's different, and a lot of people have very little international exposure that live in the United States. I'm going to stop here. You could do TLT, you could do IEF, you could do a million different bonds, but I wanted to simply say treasury bonds because the market, the Fed's talking, and are they going to lower rates? Probably not. But will they be lowering rates soon? The bond market's already priced in that they're probably going to 2 to 3 times later this year. So that's interesting. So bonds versus the S&P 500 are just breaking out. So that's really interesting. You've been in this really difficult bond environment that we've talked about for a while. It's like, why own bonds here? Which I think we made a little couple trades, but we really haven't had any long-term bond exposure. But the trend is changing. So if one does own bonds, again, manage your own personal risk. This is different. You're getting outperformance. Bonds are up 2.4. Longer term treasuries are up more than that. Again, the market's down 4.5. So where is the money moving? It's moving physical commodities, let's say gold. Silver, the chart doesn't look as good as gold, but it's just happening now. So silver's on our radar. It's going international and it's going to bonds. Mike, you want to wrap up this segment? Anything I missed on the thesis?
Yeah, and I think just to add to what you were saying, as far as international, especially what's interesting is Asia, is what's going on in China. So if you wanted to comment on that in a minute.
Stimulus, growth, and inflation. What we have in the United States is a massive contraction. And maybe it's just starting, maybe it's ending soon. No one knows. We follow trends, but the answer is tariffs plus Doge is not a good recipe for growth and for what's happening. So inflation's again, it's not like sinking like a rock. It's staying relatively stable but falling. In theory, it could be accelerating later this year, but growth is contracting. And growth came from the government sector, and that's being stripped away. So those other parts of the world can benefit. They did that. If I don't, if you remember, I remember when I was starting my career at Fidelity, everyone was talking about Latin American stocks and how exciting they were. This was like in the early 2000s, and emerging markets were like the king of the castle back then.
Mhm.
And there's a chance that that could come to a theater near you, and it's starting now. So People weren't talking about the US, I guess I'd say they were like exceptionalism. They were talking about emerging market growth. And some of it's just simply stimulus. So if you have any questions, hello@investwithrules.com. We hope we find these videos helpful. If you have any feedback, just let us know. If you're like, man, I would be great if someone could review my positions, talk to me about more about risk management. I just don't have the time. Just reach out hello@iwradvisors.com. Totally separate business, but we're here to support you no matter what is best for you and your family. So I'm going to stop there. Thank you. Thank you for your time. We'll be on the live sheet. Talk soon. Have a good day. I hope this helped you kind of identify some either uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com. Thanks so much.